Welcome to the Virtual Protocol Strategy channel. This is how it could be called because this is now Virtual Protocol video number 7. Now the question is, does it still make sense to buy virtuals or is it too late? Let's have a look at the on-chain metrics most people aren't considering. Let's see how much potential upside there still is. Now here are the statistics of the very first Virtual Protocol video on this channel. It's now 2.5 months ago and already that video outperformed an average video. So there was already some interest from the start. That interest is not going away. We continue to outperform. And so 2.5 months ago, the price was still at 41 cents. Now we are at $3.88. The chart looks pretty much like a hockey stick. If you want to be early for the next potential 10x, then feel free to subscribe over here. I try to be very early on projects that have positive momentum, but at the same time, still a lot of upside. Now here's something interesting. This is the trending tokens on the base chain ordered by their liquidity pool size. So how much capital is locked up in a liquidity pool on each different token. And there is no surprise to see Coinbase wrapped Bitcoin at number 1 and number 2, but there is a surprise. Check out where the Virtual Protocol token is. It's at number 7. And this is especially surprising given that there is the Game token and the Luna token, which are sub-tokens of Virtual. So there are individual launched AI agents from the Virtual Protocol platform that have more liquidity on Base compared to Virtual itself. How is that possible? Here is the answer. Virtual Protocol is already heavily owned by the market makers and by the centralized exchanges. Most trading volume does not happen anymore on chain on Base. Instead, most trading volume happens on Gate.io and on Bybit. There's also BitGet and HTX. Yes, there is still activity on Uniswap on Base, but this is not necessarily where the price discovery happens. On top of all of that, we've also got levered bets on the price. So there is now leverage in the Virtual Protocol price, and that leverage is led by Binance with trading volume of almost 300 million worth of Virtual in the last 24 hours alone. Now Virtual is native to Base. However, there are actually two versions of the token. There is one on the Base chain, but there's another one on Ethereum as well. And in prior videos, we've only looked at the token on Base. We haven't looked at the token on Ethereum. Now on Ethereum, there are more than 20,000 holders. This compares with almost 300,000 tokens on Base. So there's more than 10 times more holders on Base than Ethereum, but the mismatch isn't really that large when we look at the actual capital that's on both chains. Have a look at the number of holders over time on Ethereum. On the left side, we've got the number of holders that have 250 virtual tokens. So that's $1,000 worth of the token. In the middle, it's $10,000. On the right, it's $100,000. We see how the number of small retail investors tends to grow, especially since October of last year. But for the medium-sized holders and the whales, it tends to go down a lot. Now, does this mean that those large holders are selling? I am not so sure, because here are the exact same thresholds for the Base chain. And here we see accumulation across the board. Now what I believe is that some whales simply just bridged their tokens over to Base. The chart for Base starts in April of 2024 and the number of whales grew to more than 1,000 wallets. Since April of 2024, the number of whales on Ethereum went down by roughly 400. So there's still a net gain in the number of whales of roughly 600 wallets. Now that's a lot of capital, right? $100,000 at minimum times 600 wallets. That's 60 million US dollars. When we look at the liquidity pools of the virtual token across different chains, the whales have a holding that's roughly equal of all of that liquidity. Now what is important to know is that the value of a liquidity pool consists of two tokens, right? For example, the USDC and the virtual token, or the wrapped Ethereum and the virtual token. So actually, when we've got 60 million worth of liquidity pools on chain, we only have roughly 30 million worth of virtual token on chain in those liquidity pools. And so if only half the whales that move their virtual tokens to the Base chain, or that moved it maybe to centralized exchanges, if only half of them them where to sell their virtual, then the price would completely collapse. But of course, that's a very unlikely scenario because again, there is continued growth by retail, both on the ETH chain, but also on the base chain. And as long as there's organic growth, why would the whales sell? Why would the whales take much profit? Now here's another interesting metric. This is the virtual token on Ethereum, the number of buyers and sellers over time. We can clearly see that over time, the buyers tend to outnumber the number of sellers. So now most days we've got roughly 60% buyers versus 40% sellers on Ethereum. On the base chain, the imbalance isn't that clear. Why is there such a difference? Probably because there are more arbitrage bots, more automated trading that happens on base, because over there the trading fees are much lower. This is probably the more realistic, the more accurate picture, the picture on Ethereum. Now, crypto as a whole is clearly expanding right now. The stablecoin market cap is going up. That means that people are sending their fiat currency indirectly, for example, through centralized exchanges to the stablecoin issuers. So whenever money is flowing into crypto, we see the stablecoin market cap going up. Whenever money is flowing out of crypto, we tend to see the stablecoin market caps going down. Over here is the Terra Luna collapse. So this is when UST went bust. Afterwards, we had the FTX collapse. And then since October of 2023, we are expanding again. So money is flowing into crypto. People are sending their fiat to the issuers. And then we can see that issuance here on chain. Now, had you bought Bitcoin in October of 2023, the gains would have been nice. So that's an appreciation of 281% in the span of a bit over a year. But then there's of course inherent leverage in smaller tokens, right? It takes a lot of money to move Bitcoin. It doesn't take that much money to move something like Fartcoin, for example. Fartcoin, since listing on CoinMarketCap, went up by 18,000%. Isn't that better than just holding Bitcoin? The art is of course to find something like Fartcoin early, right? To be among the insiders, to be among the people that tend to make the right trades. And here is how I personally find those tokens early. I made a video on Fartcoin very early on this channel, and the way I did this is I got an alert that Kyle Chessy bought the token at 5 cents. That was on October 23rd, and I got that alert via on-chain analysis. So through various techniques, we can find what influencer owns what kind of wallet, and then we can get those wallets and get alerts whenever those wallets transact. And so for Kyle Chessy, for example, we've got 12 wallets that we are following. Here is his YouTube channel. He's got 141,000 subscribers. And this is how the price developed since that alert, right? A very nice gain, much better than just buying and holding Bitcoin. And also over a shorter time period, right? This is October of 2024, and the crypto expansion started in October of 2023. So 1 year since that alert. And so really, this is, I believe, how to make money. It's very important to have an edge in the market, to know more than the rest. It's not enough to just buy the largest of the tokens, because again, it's all about the upside. Have a look at the top performing meme tokens in the last 7 days. It's all relatively small market caps. It's in the tens of millions, maybe hundreds of millions. Each and every single token made at least 100% in the last week. This is very different to the largest meme coins, right? Not a single one of those tokens made 100% in the last week. It's really about buying those small tokens and buying them early, knowing those tokens before others do, knowing those tokens when the smart money is buying in as well. And so I just bought another token today. This time Crypto God John bought the token for $50,000. And we don't necessarily need to get the best traders always, right? It's just enough to follow traders that have a lot of followers, right? Crypto God John has 775,000 followers. When he talks about a token, of course this generates attention, and attention leads to purchases, and purchases lead to rising prices. It's not even necessarily about following the smartest people. It's just about following the people that have other people that follow them, so that we simply have purchases after our purchase. Since that alert, the price of that token more than doubled already. And so we're not just following Kyle Chessy and Crypto God John. Another influencer that has very high risk plays is Crypto Gains. He's got 144,000 subscribers. He buys into very small tokens as well, and he's got a very loyal following. And we've got 55 of his wallets. He's changing wallets more often than other people change their underwear, so this is why the number is so inflated. But we've also got wallets by the really big guys, the people that might not buy the super micro caps, but that have a lot of following to still move even bigger tokens. For example, Crypto Banter, 1.4 million subscribers, and 33 wallets of them are tracked by us. I really like this strategy. That's why I made a dedicated tutorial course just on that topic. How can we find influencer wallets? So there are several approaches. How can we then also track those wallets, and how can we finally interpret the signals that we get from the tracking? It's all part of the premium membership of this channel. Premium is not just about wallet tracking, it's also about risk mitigation. It's also about on-chain analytics, right? The charts that we have seen in this video. There are more than 100 tutorial videos in total in premium. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. Now, does it still make sense to buy virtual protocol right now? Since there's still organic adoption by retail and since the whales aren't really dumping on retail, how much higher could virtual actually go from here? Let's have a look at market caps. The virtual protocol now has a market cap of almost 4 billion. That compares with its strongest competitor AI16Z that's currently at 2.4 billion. What I find fascinating is that the price reaches new all-time highs, probably because of the leverage done by the centralized exchanges, while the usage of the platform actually is not experiencing new highs. Check this out. This is the protocol revenue over time, and it's rather low in the last few days. Now, the trading of the virtual tokens is still at relatively elevated levels, but still, isn't it interesting how the price does not stop to climb while the usage of the platform clearly has its ups and downs? I personally prefer to own tokens where there's a lot of organic growth and where the market makers don't yet own as much of the supply. I like to own tokens where there's potentially still an upcoming centralized exchange listing, where then the accumulation by the market makers or where the announcement of a listing by the market makers could potentially push up the price. Wouldn't it make more sense to hold something like the game token, where the market cap is only at around 200 million and where trading volume is not yet dominated by the centralized exchanges? I think it does make more sense. Crypto is of course super risky. We can easily go down 50% in any asset. Why then own an asset that's already in the billions of dollars when other assets can easier make the 10x when they're still just at a few $100 million? I don't think that the virtual token will go down from here, rather the opposite, right? We see continued adoption by small retail, but I'm not sure if the current risk is still worth it. It's all about opportunity cost. It's all about finding the best risk to reward. And when the virtual token goes up by 10%, then probably a lot of the ecosystem tokens will go up by 20, 30, 40%. I simply like to look at other influencers. I simply like to follow other top traders. And when they are buying a token on the Virtuals protocol, and when the market cap is still low, then I'm buying as well. For Virtual itself, I'm not sure if it's really the best bet. It's probably better to have a somewhat diversified portfolio of smaller market cap virtual protocol AI agent tokens. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers!